Hello everybody, welcome back. We're going to address the elephant in the room, which is Atom. For some reason it was rallying a fair old 10% yesterday, so thought we'd have a little look at this one. One of the reasons is I actually hold quite a lot of it, to be fair. One of the worst, well, I say the worst, this exact area is basically my overall entry point, sort of generally speaking. I hold the vast majority of it on Swiss Borg, where I stake it, so it sort of graciously tells me exactly where my average buy is, really. So I say basically it's around about here, which is fine. It could be worse. So what we're looking at here on the daily is a giant death cross, exponentials, simples, and we've come up now to a 50 exponential and a simple, so a retest effectively. Yesterday we managed to get above, retest the Bollinger Band center, and then make our way up towards the top. So we're looking at this now. There's no bearish divergence on this daily, so the majority of crypto was sort of green to an extent, but Atom was really powering through. So looking at this on another time frame, being the 4 hourly, we do have a pump signal that was generated, which went straight through the 200 exponential on the 4 hourly now. So there's where you'd expect to see a rejection, as you generally tend to see on simples and exponentials after death crosses. So there's a simple, there's your exponential, there's your death cross retest, bang, bit of a move up here, bang, another one here, down, bang, another one here, bang. So it could obviously all get faded. And looking at the money flow index over here is pretty overheated. Obviously, it is only a 4 hourly, so this can be overheated, come down to perhaps maybe your center of the Bollinger Band or something along those lines, get picked up and higher, low, and move back up again. But that is particularly high. You don't ever really see good things happen when you get this high. I mean, it's just the nature of it, really. So there's another high read over here, marking this peak. Another high here, more or less reaching these peaks. So it's inevitable, in as far as I'm concerned, that we're going to sort of consolidate from this, pretty much this level. The question is, though, as we have in the past seen consolidations from this level, and again, it's just a volume indicator, isn't it? So if you're looking to take money out, you do it when the volume's high. That's where you can get the best bang for your buck. So yeah, I'm not saying that this is the peak or anything like that. It might be a peak in the temporary for a 4 hourly, for instance, but it's a peak all the same. Pull back and then up. Overheated read, pull back, then up. High, low, high, 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 low, high, 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 low, high, high. So we might be looking at something like that, and you know what? That'd be pretty awesome if we were to get that. So let's move back to a weekly, and you see a very significantly oversold. And again, that word for the money flow index probably should never really be used. It's not about oversold. It's all about divergences, really, as far as I'm concerned. But it's pretty low, should we say. The good thing about a low money flow index is that if, and only if, it were to turn around from a low area, it has a lot further to run. So the obvious places on this chart here is you've got $6.17, center of the Bollinger Band, you've got $9.36, 200 exponential, you've got this trend line, which comes in at around about 11.34. Then you got this one at around 13.14. Once all of those are cleared, then yeah, excellent. We're talking 20s, but that is a long way away from this exact very moment in time. And for me to say that's where we're gonna go, that'd be really good. Might be worth saying that just for the clickbaits, but What is it that I always say? If you're on the Patreon or whatever, you do the live streams. In fact, we're doing a live stream tonight. If you want to join for the Patreon live streams, there's links in the description below for that. But what do I always say? When at resistance, expect to be rejected. And so there's a lot of resistance on a variety of time frames, not the 4 hourly, but the daily, the weekly, for instance. And so expect rejection at each one of those. It's only when you basically get away from all those resistances, then rejections are less likely until the next big one, which is 28, and then 33, and obviously up here in the mid-40s. But we're sitting at $4.65. So for me to talk about $40 at this level is nothing more than pure speculation, massive hopium, clickbait. But that's what YouTube is, isn't it? So if I enticed you into the video with a bit of clickbait, it's not that it's like absolutely impossible. We saw moves like this before, didn't we? We were all the way down here at $1, we went up to $44, but no one would have seen that coming. to be fair. At least this one has got some kind of, I don't know, areas on the chart to say make up from. And you know what, there's a reason I hold Atom. There's a couple of reasons. The fundamental reasons that obviously it's not a scam coin, it's not a rug pull token, it's not a pile of Shiite. It's it's a reasonably decent blockchain with utility and a big team. And also the staking rewards are pretty epic, so I stake a lot of it. The vast majority of it I stake, and that's why it's on Swiss Bog. Yeah, it's easy to stake it. I hold it for that reason. I'm happy to hold it for a long period of time. I'm not in any massive rush to sell this stuff. If I have to hold it for 10 years, I shall hold it for 10 years. And that is something I haven't ever really thought about that far in advance. Holding a crypto for 10 years sounds pretty deadly to me, but, I might as well give it a shot. If you could wind back the clock and hold, I don't know, XRP. I mean, I bought XRP for the first time about 10 years ago. That'd be good to be holding it right now, wouldn't it? from those entry points, from those 2-3 cent zone entry points, that'd be pretty epic to hold them back then. If I had held the first ever amount of Bitcoin that I bought, it was a couple of $100, I think, probably less than that. Ethereum the same. So you think, okay, if I could wound back the clock and just hold those things for 10 years, oh my god. So thinking about it in a small bit of a early pension pot or something like that. I'll take a chance on this and hold it for 10 years. But I've spoken about that on the Telegram before. So there's not much point in me trying to chart this out 10 years in advance. The idea being is that it stakes for a large amount. On average, you get about 16%. It fluctuates, but you're thinking about what 10 years in the future would look like. It's either do or die, isn't it, really? You can't really look at this chart and go, well, in 10 years' time, this is going to be XXXXX. Who knows? Could be anything. Right, so we've done the daily, done the weekly, we've done the 4-hourly, and we've established that actually we're more likely to pull back to the low $4 than continue to go up from here. And that's perfectly normal, natural, reasonable, and expected. If we lose the $4.20 area, then we're probably going to go for a full retrace all the way back down to where we started from, maybe even new lows. Before we go any further, we might as well look at Bitcoin and see what's going on over here. So we had a nice little move, sort of slowed down a fair bit. There's no pump signal on this one. The next move up from here should take you up to around 89,000, maybe 90 and 92. All of that absolutely acceptable to see. The US 500 managed to reclaim the Bollinger Band as well, so the stocks actually look reasonable in the 4-hourly, with a view to make its way back up to 567, 5,079, 790, and so on and so on. I don't think that we're going to be making our way above 6,000. I think we're going to have a rally up to those areas and then a lower high, then pull back again, but we'll have to see. So just everybody on their guard when you get to those levels, if we get to them at all. Just be on your toes, because the crypto market has suffered as a result of its own doing, but also as a result of the stock market coming down, which is all, that's the nature of what's happening right now. Everything's moving down together, apart from gold and silver, which seems to be having a nice old time. I don't believe the cycle's over, like I said yesterday, and pretty confident that the cycle is not over. You look at Bitcoin, you look at the total market cap, you even look at total too, and all you see is a series of higher highs, higher lows, relatively decent bullish structure. I'm pretty confident that we're just going to have another rally at some point soon, maybe even for Bitcoin, maybe even towards that $100,000 zone, but at this very moment in time, we are Sunday, so we've got to wait for stocks to open, we've got to wait for Forex to open, and then we've got to wait for old men's mouths to open, and because you just don't know who's going to say anything these days. Someone will say something at some point. I would say though that with this is just a way of tracking like CPI, inflation, stuff like that. We are breaking down now, or at least continuing to trend down. I know it seems obvious now in hindsight, but there was an area before where you had the breakout, you had these retests, you had these lower retests, and you did have a rally on oil that moved back all the way back up to $80. It doesn't look like it really wants to try that anymore. It looks like it does want to try and break down and continue to move down, which is good because oil prices are attached to everything. Food, fuel, obviously, manufacturing, the lot, everything. So when you see higher oil prices, assume higher inflation. You see lower oil prices, you should assume lower inflation. So the lower the oil goes or stays low, the more likely it is that inflation will not rise and it will continue to move down. Just it's a crude, oversimplified way of tracking the inflation scenario. And as you can see, you will recognize that actually the inflation peak was the oil peak, and since then it's gradually been moving down. I don't know why the Fed don't just refer to this as much as possible and say it how it is, you know, oil prices equals inflation. But I mean, I'm sure there's a lot more to it. I'm just giving it to you in the most simplest way, a way that I've been able to get my head around it. And you know, as far as I'm concerned, it does look like it wants to go down and continue to go down, so inflation will go down. So the reason I'm talking about that is because if inflation goes down, then there's a chance it will go below the 2%. And if it goes below the 2%, then actually the money printers may switch back on again, because you don't want it below 2%. No way, you've got to have some inflation. 2% is the target. It's currently around 3%. I think we're going to make our way lower and lower and lower, and they're going to try to battle with keeping it around that area. So I like what I see with oil because it allows me to see a little bit into the future. There's a lot of talk about recession and depression and stuff like that. You know, those things are obviously possible. You know, as far as I'm concerned, you've got to look at like job figures, unemployment rate, basically. And if the unemployment rate is below, I think it's around about whatever the Fed, are saying. I think their target is, I think the unemployment rate should not go above 4.5. So long as it's not above 4.5, then their expectations are being met. If it's above 4.5, then they'll have to change the goalpost again. But at the moment, it looks like everything they're saying is everything that they expect to happen is happening. It looks that way to me, especially with oil prices. But just keep your eyes peeled on the situation with jobs and unemployment. Anyway, this has turned into a real boring, it's a really boring way to talk about Atom, which is where I started from at the beginning. It's worth talking about though, because you know, every time I turn on I've put YouTube up, it's depression, recession, global economic crisis, and there is a precursor for those sort of things, and it's not yet been met. And we'll see reasons to believe that is more likely than not if we hit those targets. If you see oil move up, if you see unemployment rate move up, then all right, okay. But at the moment, I'd call it a bit of a... it's just one of those things that sort of materializes around these consolidations. People talk about the worst case scenario, you know, expectations of much, much worse. I don't really see that, to be fair. I don't see it at all. Not yet. Those precursors have not yet been met. But anyway, let's get back to Atom. Atom, consolidation, pullback, short-term time frame, looking for the higher high, higher low structure to continue on the 4-hourly. And that means that we have to stay above $4.20. Right, thou shall leave it there. Hopefully I'll see you on the live stream tonight. We can boil down some more charts this evening. Thanks for watching. Take it easy.